Morning, Andrew. Yeah, this bipartisan infrastructure bill is a pretty big deal economically. It just doesn't seem like all that amid all the other massive government spending going on all around it. Here it is in context. The government spent some $6 trillion on COVID relief in ways that, by the way, immediately move the GDP needle, like sending checks directly to people. Democrats are considering a $3.5 trillion reconciliation bill for a host of additional spending. By contrast, there's that little tiny $1 trillion infrastructure bill in the middle there. Looks pretty modest, and it will take time to have any impact. But this is the biggest infrastructure bill in a generation. Most agree, apparently, hey, both Democrats and Republicans, that the nation has over time underinvested in roads and bridges, rails, and other stuff like broadband and, of course, cybersecurity. So here's the good parts of the bill. It should mean higher worker productivity, which usually translates into better wages, more jobs, and better returns on capital investments, especially those places impacted by the actual infrastructure spending. The negative, well, comes as the bill pushes up the deficit, potentially crowding out some private investment and bringing the nation closer to, I don't know, that unknown of what its debt limit may be. Could also boost prices and wage inflation as more government spending chases what we know now to be a limited amount of resources, especially when it comes to labor. Now, Mark Zandi of Moody's Analytics, he sees it adding almost 600,000 jobs by 2025. The Penn Wharton budget model, it adds just 0.1% to growth, but you have to be careful. The effects of infrastructure and government investment, they're difficult to quantify, either how much they add and, of course, over what period of time. But even in today's world, $1 trillion is a lot of money. And if well spent, I'll repeat that, if well spent, could have a positive economic impact. Andrew?
I know you don't like to opine, Steve, but I'm going to ask you to opine. Do you believe that this will be well spent, to answer your own question?
Look, I think what the deal is with government spending is we always build in an idea that it will be spent inefficiently in return for equity, right? So probably the private sector could build a better road than the government, but where would the private sector build those roads? They would build those roads where they're profitable, whereas the government decides to build roads where they serve people who probably are underserved. So government spending is always a trade-off between efficiency and equity. And I don't mean equity the way O'Leary thinks of equity. I mean equity as in, treating everybody in a similar way. And I always say this, Andrew, that, Delta can have a line for first-class passengers, but not the DMB. And sure is not
right.
less to be in the first-class line for Delta than it is for DMB. Look, in general, we've underinvested in that regard. Andrew, go ahead. Sorry.
The other question I was just going to ask you is actually about Jay Powell. We were talking about him in the last hour, and we could talk about what we were talking about the last hour. But the other thing I was going to say is, how much is he and the board at the Fed thinking about what these infrastructure plans are going to do or not when it comes to inflation and interest rates at this point, you think?
I think that unlike the criticisms of progressives in the Journal today, I think that's the biggest criticism of Powell and the Fed right now is that they have not adjusted their policy for what's been happening on the fiscal side. And I remember back in the Bernanke and Yellen years, they would say, hey, we need to do all this QE and keep interest rates at zero because the fiscal side isn't doing anything. Well, here the fiscal side has stepped up and the Fed has not reacted. I think the other criticisms of Powell in that article are kind of bunk, right? I mean, Powell is probably the most progressive Fed chair that certainly I've ever covered, and I think maybe in the history of the Federal Reserve. He has dramatically shifted the mandate over towards the unemployment side of the mandate and away from the inflation. And maybe we're sort of paying a cost for that. But if you're progressive, that's what you have sort of angled for and been arguing for over time. The other thing on the banking system, U.S. banks, Andrew, as you know, are pretty darn well capitalized. And the idea that there weren't changes needed to Dodd-Frank is like, I don't think that makes a lot of sense. So on the substance, I think Powell wins the argument, assuming that he can get control of the inflation problem right now.